G'day guys, welcome to the channel. My name's Tim, and on today's episode, we're taking a closer look at this recent rally that Bitcoin has had from the 29th of September to the 11th of October, a 12-day period where Bitcoin increased by about 40%. Where did all this liquidity come from? I think I've got an answer. All right, let's get stuck in. All right, so first of all, I'd like to show you the Bitcoin dominance chart. And we can see this is where the Bitcoin dominance was at about 42% on the 29th of September. Then by the 11th of September, it shot right up to about 46%. So it increased by about 6% over that 12-day period. So what I've got on the screen right now is the total market cap for crypto. And right down here, this is where the 29th of September was, and this is where the 11th of October was. So that recent Bitcoin rally brought the crypto market cap up to this point, around the $2.36 trillion mark. Now, what is interesting about this is that crypto has never passed this particular point. And in fact, it's playing out at the moment a potential triple top pattern. Now, it is possible that the price goes up from here, but if this remains a triple top, if we cannot break resistance at this level, it could mean further downside for crypto in general. And if we take a look at Investopedia to see what is the significance of a triple top. So it says here that a triple top pattern shows us when the price is unable to penetrate the areas of the peaks. As the price falls, it puts pressure on all those traders who bought during the pattern to start selling. If the price can't rise above resistance, there is limited profit potential in holding onto it. As that price falls below the swing lows of the pattern, selling may escalate as former buyers exit long positions and new traders jump into short positions. So this is a potentially very scary place to be right now for crypto. So the question is, do we have liquidity in the market to push crypto beyond these levels, beyond levels that it has tried once, twice, and now 3 times to break? Now, where could that liquidity come from? Well, one answer is institutions. But as we've seen in other videos, the Grayscale Bitcoin Trust, which is where most institutions buy through, has not increased since February, which is way back here. It has not increased since this point in the cycle. So a lot of this here is potentially retail investors. So if we're assuming that institutional investors are not buying at the moment, and I know a lot of influencers are saying they're piling in, but that is really just survey results, institutions indicating that they're interested in buying Bitcoin. It doesn't mean they're actually buying Bitcoin at these current prices. The evidence shows that institutions have only been interested so far at buying Bitcoin up until around this point in the cycle, around February this year. So then the question is, could there be more FOMO and more retail investors entering the market? Well, potentially, but again, looking at the Google Trends, it doesn't show that there's a lot of interest at the moment in crypto, especially compared to what we saw from the December 2020 to May 2021 periods. So this is not indicating a lot of retail investors are jumping in. It's only Google Trends, but it's still a strong indication. Now, the one thing that retail could potentially do to push the price beyond this point is leverage trading. But we have seen in the past when leverage has been overheated in this point here and this point here, it has led to significant drops. So I haven't seen the leverage results. And if anyone has some leverage data, some on-chain leverage data, please point me to that. I'd love to see it. But if leverage is high at the moment, it could mean further drops. And if leverage increases, it could mean even larger drops. So these are a couple important key factors to keep an eye on. The resistance level right here at about $2.4 trillion. The Bitcoin dominance. Is it just stealing liquidity from the alts and just recycling existing liquidity from retail that's already in the market? Could Bitcoin drain the alts even more to reach further heights? Or will we see some sort of mini altcoin rally where Bitcoin goes down and we recycle the Bitcoin liquidity, and that goes back into alts. These are all the possible scenarios that could play out. But one thing is for sure, at the moment, we have not broken this $2.4 trillion mark on the daily close for crypto. And until we break that point and further liquidity comes into the market rather than just recycling existing liquidity, there is a strong potential that the market could be running out of steam. And as Investopedia says, the selling pressure may increase as long investors realize that we can't penetrate these levels. Anyway, a few things to keep an eye on. I hope you enjoyed that content. Feel free to follow me on Twitter at TechnicalTimCR1. And until next time, I'm Tim, and cheers.